By the way, bringing those groups together in those early stages, I think, helped catalyze a lot of kind of forward momentum in lots of ways. But you go back before 2015, Pacifica. I think I joined the third one, so you'd already done it for a few years. What was it when you first, in 2013, set up Pantera's first Bitcoin fund? What was it that you saw that made you kind of go all in on crypto so early?
Well, when you have a new technology, they try and use an analog to the old world. Like SMTP is called electronic mail, And so people call this a cryptocurrency. Some people call it a commodity. It's a payment rail. You can do cross-border remittance on it. It's really the miracle whip of finance, right? You can do so many different things. And all those businesses are so valuable that even if, crypto gets just a couple percent of each of those use cases, it's going to be incredibly valuable. And the total value of crypto at the time was minuscule. I still think it's very, very small relative to all the assets on Earth. It's still a very small single-digit percentage of all the assets. So I've been a macro trader my whole life and looking for very asymmetric bets, where you certainly can lose some money, but if you make money, the upside's much higher than the downside. And this seemed to me at the time, it still seems to me the most asymmetric trade I've ever seen, that the upside is just so much bigger, than what you could lose.
All right. So what's going on, everybody? Hope you all are having a good rising so far, depending on where you're at in the world. It might be afternoon or an evening. But I just want to give you guys a quick market update, break down the level of accuracy that we've been delivering to you guys, not only in the form of technical analysis in the private community and publicly, because I'm going to be utilizing this as a YouTube video. So I want to show you guys how for some call outs, I both announced them publicly and privately. Then I want to go over fundamentals, just kind of do a quick overview of what's happening in the market, how we've been discussing and talking about it, and how I've been warming you guys up, not only in the form of Zoom calls, but also in the form of fundamentals for a bullish continuation based off of certain conditions that are being met right now or expected in the market, surrounding rate cuts, central bank positioning and whatnot. Really just going over and touching on why we're seeing another inflow of capital into the digital asset space today. In yesterday's Zoom call, as a matter of fact, we'll start there. In yesterday's Zoom call, I mentioned to you guys, here's the call from yesterday, November 12th, 2024, at roughly about 16 minutes and 15 seconds is a timestamp where I talked to you guys and said that as long as price remains above these two bullish areas of interest, or as long as we remain above the November low, that most likely scenario is the risk on market sentiment is going to continue in some way, shape, or form. As of right now, I think that this is just some slight profit taking as the market is preparing for some real important economic data this week. So for now, it's nothing to be fearful of. Okay, it's nothing to be scared of, but it's just important to understand why, looking at the hourly time frame, right, taking from the high to the low, we've pulled back over $100 billion. Okay, I still personally think that this uptrend is going to continue. Hopefully, we can see fundamentals supporting a soft landing this week. So now we're seeing that reflected over $100 billion of inflow and capital into the space today alone. We're going to break down why that is, keeping in mind that tomorrow the sentiment could shift again, which is why I'm going to go over for you guys some things that I'm paying attention to, so we can just continue to remain adaptive and responsive to these markets, but show you at the same time that we've been extremely accurate, telling you guys in what direction we should be trading and what we should be looking for. I don't want to sit here and say, I've been telling you guys what you should do. I've been telling you all what I'm doing and what I'm looking for. And you guys can see now how that's being positively reflected into the markets. Okay. Because remember, none of this is financial advice. You know what I'm saying? So we're going to start here. By the way, shout out to anybody that was on the call, Zach, May, that came out last night, Aqua, man, it was a really cool time, really good experience, never a dull moment, which was really cool. Actually getting to meet two of you guys from the Discord in person was, I'd say it was pretty dang cool. And it was pretty cool. So I look forward to meeting more of you guys, as times go on. But it was really cool of an experience to be able to connect and network. And Zach's a really freaking awesome person, great person to have in your circle. Same thing with May. And I'm pretty sure her uncle's in this community as well, which is awesome to see. So I just wanted to shout that out real fast. So let's break this down. Again, like I said, I'm going to use this for YouTube content. So we're just going to kind of utilize the predictions that I've been giving to you guys, not only in the private community, but also publicly to you all about the digital asset XRP. So as a more out further previous video, you can see this video is from roughly about 2 weeks ago. And it's when XRP was trading at about 49 cents. This is what I posted to you guys publicly. First, we'll get into that. And I mentioned that if XRP remained above these institutional deltas at 49 cents in this video, and we saw a prevalent risk on market sentiment, that the most likely scenario is that the XRP uptrend or this bullish market was going to continue. The downside, 49 cents still remains. Right now, we're trading at about 51 cents. If we can tap back into 49 cents, maybe possibly create a double bottom and hold that, I will continue to buy more at 49 cents. Right. We were going to most likely see a bounce from 49 cents. We were going to see those institutional deltas hold, and we were going to see higher prices. And at that time, I was calling out targets of 57 cents, 62 cents, and now 75 cents, which is where we currently traded at into today on XRP. So this is from 2 weeks ago. So I just wanted to show you guys publicly. When I do the recording, I'm going to play a video clip. But at roughly around 19 minutes and 25 seconds in this video is when I give that prediction. And I tell you guys in an accurate and educational format why XRP, if these conditions are met, is going to continue upwards because of the optimism and the sentiment that would bring to the markets and the inflow of capital or risk assets that we would most likely see under those conditions. All right. Moving on publicly to you guys on X, you can see here, this is a post I made to you all on November 6th. We're going to head to the charts. I'm going to show you guys where price action was at. But I specifically said here, if XRP breaks and manages to hold above 55 cents and the risk on market sentiment prevails, our next immediate hurdles rest at 57, 66, and 75 cents. Okay. Now we're going to get into price predictions towards the end of this video breakdown. So you are going to have to stick around for that. I'll get into that analysis technically after we go over the fundamentals. I'll deliver you guys the updated deltas on XRP that I'm looking for if price pulls back, risk off, or the targets that I'm looking for, possible profit taking or slight capital reallocation in the form of bullish targets. And we'll get into that in just 1 second. So again, stick around to the end of this video. But so on November 6th, I posted this to you guys. And if we head over to the XRP charts and we plot where November 6th was on the charts, you can see here that XRP was trading right around that sweet spot in between 49 cents and 50 cents. All right. So you had plenty of opportunity to take advantage of discounted XRP before it ignited into 75 cents. And this is just one of the many call outs. There's many other call outs that we give in the CYPRX private community. Like we called out soy at 50 cents, Arrow at 50 cents, XLR at 45 cents, and other opportunities like bread at 3 cents, so on and so forth. But I just wanted to show you guys timestamps that we are accurately doing this before the market moves. And this is all based off of institutional deltas, logical, fundamental, and technical analysis. Nothing hypey, no crazy indicators or any garbage like that on my charts. Naked chart price action, a logical understanding of fundamentals, and then you implement institutional deltas and it becomes like drinking water. You guys can now see in real time, okay, in real time, that when I was telling you guys 2 weeks ago that XRP was going to bounce from a buy delta, an institutional buy delta at 49 cents 2 weeks ago, throughout the process was able to continue with those targets. Here's 75 cents I gave to you guys on November 6th, right? And now you can see, looking at the charts, price literally went from delta to delta, from buy delta straight up into an institutional sell delta, right? Level to level. Level to level trading, why the market is seeing a capital inflow of liquidity into risk assets, understanding that process and understanding what direction to trade in. This is a high level of skill that not a lot of people can achieve in these markets. It's not hopium, it's not hype, and that's why most people have probably clicked off this video by now, okay? Because it's not hopium. So we're going to go over those targets, bullish and bearish, but we'll get to that point. I just wanted to open the call with this to show you guys that we had been talking about this. Let's talk about this. So in the reports, let's go back to November 8th. Okay. This is a November 8th report. You guys can see the date right here at the top. These are our Canva reports that I hand type out for you guys. I was giving you guys some potential factors that could continue to weigh on the prices of digital assets, which still remain a risk, right? The inflationary pressures that Donald Trump's policies could bring in, the yen carry trade unwinding at a rapid pace if the Bank of Japan decides to hike rates, which full circle, we'll get to that at the end of this video, because that's something that is coming up and came up via some Japanese data that we need to take a look at. And then obviously, of course, geopolitical tensions. Those are all still primary factors that, if they unfold, could weigh on risk asset sentiment. So we still need to be mindful of that. But at the bottom of this report, proving to you guys that days ago, I still told you guys what side of the market I was still looking at trading on. Look at this. This is again from the 8th of November. I said, for now, we stay adaptable and ready to take advantage of any opportunities arising from pullbacks in the market while maintaining a long-term optimistic outlook for the crypto space. So the way that I, after educating you guys, ended the article should have left you with a risk-on market sentiment taste in your mouth, right? Because nothing in this article says that these fundamentals are coming into fruition. They're just things that we need to be mindful of moving forward. And then I ended it with enlightening you guys on what direction we're still trading in currently. Okay. Even though we started to see a slight pullback in profit taking, that is now again been consumed by the over $100 billion that came into the market today. All right. Moving on. This is a report from November 10th. Just to continue the sentiment that I delivered to you guys in the form of fundamentals, I said right here, talking and discussing about inflation, which we got today, playing out scenarios for you guys. I let you know right here. This is just one tiny key highlight from this November 10th report, which is again today as of time of recording the 13th. So you guys got all this information in advance. Impact on risk assets if inflation comes in below expectations or shows signs of continued disinflation, right? This scenario could be bullish for risk assets. Lower rates usually reduce borrowing costs and improve liquidity conditions, likely fueling further gains in equities, crypto, and other risk categories, okay? Now, if we come over here to the November 13th report, I also said to you guys scrolling down, this is from this morning. I typed this out at like 1 a.m. When everybody was sleeping and I knew that the data was going to come out, the CPI today during New York session, I reminded you guys again. If inflation moderates, the Fed would be more likely to reduce rate cuts, or the market expectation would be that the Fed would continue to likely reduce rates, which could boost investor sentiment or appetite for risk assets. I literally put it in blue for you guys, so that way it triggers your sensories to color, and blue signals bullish or blue signals green, light, go, right? Red triggers fear, right? So I put to you guys here, if inflation rises, the Fed may delay rate cuts because that would be something that could weigh on risk assets, right? So I even color coordinated this for you guys. This was yesterday. Well, yesterday for me, today for most people, but this morning, early 1 a.m. Okay, when I wrote this report for you guys. Fast forward to today. So now that we're caught up, now you guys have seen, I've been mentioning to you guys throughout not only the form of price predictions and accurate technical analysis, but also fundamental reports from November 8th, 10th, so on and so forth, just continuing the information flow. Now we're going to break down why today, if we look at the total cryptocurrency market cap, you guys can see an inflow as of time of recording of $99 billion. That's a lot of money. You know, investors today were able to see or buy $99 billion worth of crypto. That's a lot of money, in my opinion. That screams risk on today. So I wanted to pick apart why that was, and it was primarily due to the inflation readings that we got and the market still holding and gripping onto the narrative that the Fed is going to cut rates again in 2024, right? And that fuels investor optimism, in particularly risk assets and crypto in this scenario. Okay. But we need to be mindful of the things that could unfold. And I want to cover that for you guys as well. So today, this is now our updated November 13th report. Key takeaways from today's report. Let's dive into this and let's zoom in a little bit. So bullish momentum for crypto. I'm just going to read this and talk about it as we read through it. The market is pricing in a strong 62.4% likelihood of a 25 basis point rate cut by the Federal Reserve in December, which still fuels optimism in crypto as lower rates typically support speculative and growth-focused assets. This rate cut expectation has already led to over $100 billion of inflow in crypto. That's as of time of writing. I could change that to 99, signaling continued investor confidence in digital assets amid easing monetary conditions. Keep in mind, that is not only the Federal Reserve that is easing monetary policy, it's other major global central banks as well, okay? Potential Fed caution. This is just key takeaways from the report as we dive through it. Although a rate cut is a more probable outcome, the market has slightly reduced the expectations for its cuts compared to a week ago, albeit I don't think that's being priced in yet. So it's something that we need to be mindful of as more data comes out. So with the notable 37.6% chance of rates staying steady in December, comments from Fed officials like Dallas Fed President Logan cautioning against over-easing could indicate a more restrained approach that might temper risk sentiment. So moving forward, again, remember in previous months, I told you guys these percentages from the CME watch tool are clutch in determining risk on, risk off sentiment. It's very simple. Risk on sentiment will continue to prevail most likely if the percentage likelihood of a rate cut increases. So if we see this likelihood of a 25 basis point rate cut and the next couple of data releases increase above 62%, further supporting Fed rate cuts, it's most likely that a risk on market sentiment is going to continue to be priced into the market, as that would make investors a lot more optimistic that the Fed is going to cut rates at their next meeting. Inversely, if this percentage chance of the likelihood of the rate staying the same or this decreases, that is going to push back on rate cuts and could be a scenario or a factor that weighs on risk sentiment as we head into December. So that's why I added these percentages in, because they're crucial to your market analysis. All right. So I said, watch for Fed signals and economic data. If the Fed suggests a slower pace of cuts or pauses the rate cut cycle due to inflationary concerns or economic resilience, risk assets, including crypto, could face headwinds. And again, I'm just cautioning you guys. Now, you know, if you see the dynamics change hands, how to be reactive towards it. All right. So U.S. inflation moderates, but the Fed rate cut expectations still remain on the table after today's CPI data. Market, for now, remains risk on, but be cautious. I said that here to you guys in bold print. All right. The latest consumer price index, or the CPI data for October, shows inflationary pressures moderated, but not significantly improving. Monthly inflation rose by 0.2% overall and by 0.3% in core terms, excluding volatility, energy, and food prices. The stability aligns with analyst expectations, yet the persistent core inflation rate underscores that downward trend remains gradual, keeping inflation for now above the Federal Reserve's 2% target. And here you can see it says the data does not argue against further policy easing by the Federal Reserve. So what does that mean? That means that rate cuts still remain on the table. If the data does not support or push back rate cuts, that means they still remain on the table. Markets, because they're greedy, right? They'll start to price that in. They'll take advantage of that. Okay. But it says here that they could support those who want to slow the pace of rate cuts. So that's why in this report, I caution to you guys to pay attention. We know what will create that cautionary stance: higher inflation readings, upbeat labor market data, any supportive economic data from the US showing strength and resilience, and that the Fed is not going to need to cut rates to support the economy, right? Very simplistic. Moving on, expectations of the December rate cut and impact on market sentiment. So right now, the market remains optimistic about the Federal Reserve rate cut, cutting rates by 25 basis points in December. The CME Fed Watch tool indicates, like I said, a 62.4% probability of a rate cut, although this outlook has slightly softened as traders are starting to adjust expectations based off of incoming data. This anticipated easing, however, for now continues to stoke risk on sentiment, especially in crypto. And here's a screenshot from that fundamental report that I used to gather that info. All right. So crypto markets are still seeing a pronounced effect on this optimism. Inflows into digital assets have now exceeded $100 billion to date. Obviously, of course, pushing Bitcoins to new all-time high, Bitcoin to new all-time highs. The anticipation of lower borrowing costs and more accommodative monetary environments provides fertile ground for speculative and high growth assets, which typically benefits in low interest rate environments. So right now, something else that I'm being mindful of is we had a Fed speaker today, Fed Logan, and he actually delivered hawkish commentary. Now, his hawkish commentary did not weigh on the optimism that the Fed is going to cut rates at their next meeting because of the inflationary figures that came out. However, we need to be mindful of what he said, because what he said, if it unfolds, could weigh on risk sentiment. And pretty much what he talks about is inflation escalating. So notably, Dallas Fed President Logan advised caution regarding the pace of future rate cuts, pointing out that while additional cuts may be likely, the central bank must avoid pushing rates below a neutral level that could rekindle inflationary pressures. Logan's comments reflect the Fed's careful balancing act, seeking to stimulate growth without reversing the progress made on inflation. While Logan's words hint at a slightly cautious approach, they have not dampened expectations for a December cut. So right now, that's why I'm saying to you guys, even though the Fed president came out with hawkish comments, the market sentiment is still gripping on and holding on to that risk on rate cut narrative, okay? Which is why we need to pay attention to those percentages, right? Should they Fed signal hesitation in December, it might weigh on these assets as continued cuts are seen essential to prolonging the risk on climate in the face of the modest inflationary progress. Then I broke down this look ahead. Another thing I want you guys to really pay attention to, remember I told you guys about the yen carry trade. So in this report, I broke this down for you guys in detail in the November 13th report that I typed out for you guys this morning. Excuse me. Check this out. So I added this report here, and it talks about also heading into 2025, The prospect of the Bank of Japan rate hike introduces a critical risk factor for global markets, especially for the yen carry trade, which could ripple through various asset classes, including cryptocurrencies, right? And I talk about the impact of the Bank of Japan rate hike on the yen carry trade and how that would weigh on risk sentiment and what would need to happen in order for this Bank of Japan rate hike to come into fruition. And to sum all this up, this piece in this report, I talk about if the inflation comes out higher and economic conditions start to increase or elevate in Japan, then it's going to most likely prompt or promote the Bank of Japan to hike rates. Okay. And so in today's report, look at what happened today. This is a report, a fundamental that just came out. So remember, we were talking about this yesterday and in previous reports, being mindful of this possibly unfolding as we head into 2025. Who remembers? I know you guys remember I talked about this before. Look at this fundamental piece right here. It says, USD JPY retreats after reaching a new 3-month high on Wednesday after the release of the Japanese factory gate price inflation data, right? The increases in producer prices could filter through into consumer prices, pushing up the main consumer inflation indexes. This in turn, look at what it says. I highlighted in red for you guys. Again, color coding your understanding of these fundamentals. This would be bad for risk assets. In turn, is likely to make the Bank of Japan raise interest rates, and higher interest rates strengthen the currency as they lead to increased net capital inflows. Boom. What did we started talking about months ago that this was most likely going to happen in 2025? I know for a fact we were talking about this, and we're starting, as data continues to progress, the possibility of it unfolding in real time. So although this is not currently weighing on the market sentiment, I wanted to bring this to everybody's attention again, because it's still something that nobody's paying attention to because everybody's extremely optimistic in crypto. And if the yen carry trade unwinds, again, in my personal opinion, based off of historical data, if you just go back and look at most recent times, on July 31st, when the Bank of Japan hiked rates, crypto went from $2.4 trillion in 3 days down to $1.7 trillion. Primary reason was because of the yen carry trade unwinding. And so again, think about 13 years of borrowing the yen to buy risk assets. If the Bank of Japan, for the first time, which it is, starting to raise interest rates, starts to do that in 2025 more frequently, the Japanese yen is most likely going to continue to strengthen compared to where it's at today against other currencies like the US dollar, and the yen carry trade is going to unwind. And that will most likely lead to a risk-off temporary market environment. So just be mindful of that. Okay, don't get too over leveraged to the upside. Understand that risks to the downside still remain intact until they don't. So just be cautious. Again, it's not to induce fear. It's to be mindful and to keep capital on the side. I personally, again, not financial advice to you guys, but I have capital on the side in case this scenario unfolds where we get discounts across the board yet again because of a scenario that people don't understand. So most retail participants, if this happened, would be fearful. They would think it's going to be the end of crypto. Oh my gosh, how are we just at $3 trillion and now how are we back down to $2 trillion? Oh my gosh, so scary, right? If this unfolds, we will know why the crypto prices are pulling back, and that will enlighten us to take advantage of opportunities and not be fearful. So that's why I'm bringing it to your guys' attention, because it looks to be, from my perspective, as though in 2025, my prediction is going to be correct. And that's that at some point in time in Q1, Q2, 2025, this is going to start to weigh on risk sentiment at some point. And that's the yen carry trade possibly unwinding further. And if it doesn't, then heck yeah, bull runs 100% cleared, ready to go. Ignite that shit, because if this doesn't happen, then that's one factor that again we can put behind us. All right. So those are just some things where we're sitting at in the market now. Market's still gripping on to the Fed rate cut. Tomorrow we have the PPI or the PPI data. We have labor market figures as well. We need to pay attention to, and then we have the Empire State Manufacturing figures. So, just continue to remain adaptive. Continue to look for, if we want to see, further rate cuts expectations on the table. We want to see that CME Fed Watch Tool percentage chance continue to increase, so the probability of a 25 basis point cut. We need to see inflation either remain stagnant, seeing no signs of inflation, or continued disinflation trends. And if we continue to see that, then most likely the market will grip on and price in future rate cuts. And if that changes, we'll see that sentiment shift hands and the market will push back on those rate cuts. And that's when we'll start to be like, okay, maybe now it's time for a pullback. And if a pullback happens and you don't react to it by shifting capital around, you at least are educated on why that pullback's happening, which allows you to better handle the market pressure of holding positions or whatever the case may be. Okay, moving on. XRP. All right, so let's break this down. Technical analysis, very simplistic. I'm going to give you guys risk off market conditions, levels to be paying attention to that I'm looking at, and then risk on continued market conditions, levels that I'm looking for to possibly reallocate some capital into stablecoins and take some profits. Okay, no leverage, just simply DCAing in, buying at lows, selling when prices at institutional sell deltas, and buying back in when it's back at buy deltas. Very simplistic strategy. Okay, so right now, XRP is trading at about 71 cents, 72 cents, give or take, as of time of recording. If the market risk off sentiment prevails, that means current market sentiment starts to disseminate or go away. I don't know if disseminate's a word, but go away. And we start to see risk off sentiment overpower. We see investors start taking profit on risk assets and putting them into safer haven assets like gold, Japanese yen, or the dollar, right? Under those conditions, I could see price of XRP pulling back to 61 to 57 cents as our first areas of interest for a market pullback. Okay. Reason being is because right now we just recently broke a previous structure high. And so right now we're in a new bullish leg. And so if I'm looking in terms of discounts, if I take a fib from the low to the most recent high, which trades at roughly about 75 cents, you can see that 70% sweet spot that institutions like to pull back rests at about 57 cents. Okay. And again, this is just using logical technical analysis. Now, interestingly enough, that 57 cents and that 70% sweet spot for a market pullback in the form of institutional discount, it falls in line with a institutional delta zone. So that's why I think that is a very logical target if the market does start to flip risk off that we could be looking for possible better entries, intraday positions, dollar cost average, so on and so forth. So 61 cents to 57 cents are my most immediate bearish targets if the market sentiment flips risk off. To the upside, if the market sentiment continues risk on, we can break above 75 cents, or we can see a healthy slight correction down into maybe the high 60s in a market continuation. I could see us possibly trading into about 81 cents to 85 cents. Those are the next institutional sell deltas that I see on the markets. And if we do continue to push higher under risk on market conditions, I think that those are very logical targets for some possible profit taking, or again, capital reallocations at highs to get back in if the market pulls back. Okay. So to the upside, 85 to 81 cents. To the downside, I'm looking at 61 to 57 cents. You guys now have those bullish targets. You have a full fundamental breakdown, and you also now have everything that we have laid on the table in previous analysis, publicly and privately, showing you guys that here at CYPRX, we are probably, if not one of the most accurate trading and investing communities in this space. I get that sometimes in the private community, it might be hard to pay attention to this stuff because it's a lot. But imagine being on the back end of creating it all for you guys. Trust me, I know it's a lot, but it's a reality and it's a very accurate one. So tap into this stuff. You guys are starting to see time and time again that this stuff is proving accurate. The information that we're providing here at CYPRX, no other community is, whether that's in the form of fundamentals, research, or technicals. You're not getting all three of those things accurately in other communities. So continue to tap in.